Good afternoon, ladies and gentlemen. Good afternoon. I hope that you can see the slide. I hope that you can hear me loud and clear as well, ladies and gentlemen. It'd be fabulous if you could just ping us in the chat box to sort of let us know that you can hear us and that you can also see the slides. Great to be here. Here we are, ActivTrades Monday Market Matters webinar on how to trade the 4-hour chart. Here we are, 21st of August 2023, and it's Paul here, and it's great to be here with you. Thank you, Paul, saying you can hear it. Fabulous. Yes, I appreciate we had a little few sort of tech fights, should we say, tech challenges, but you know that's the nature of the beast, isn't it? But the important thing is that we can all hear, you can all hear me and see me today. That always makes me happy and makes for a better session for us all. So thank you for that, ladies and gentlemen. Thank you for letting us know. And I said we're here to talk specifically today about trading the 4-hour chart, and I'm going to talk a little bit about that, and then I'm going to just share with you just a very simple way to sort of trade a 4-hour trend, primarily sort of for FX, but you could use it across other instruments if, you know, depending upon your own particular trading style. Just something nice and simple to be able to sort of look at sort of accessing the trend. So what are we going to talk about today? As always, we'll do our normal Monday Market Matters intro, looking at the news and what's coming up this week. But we'll also talk about primarily, you know, 4-hour charts. What is it that you need to be aware of when you're trading the 4-hour charts? What are the pros and cons of trading those 4-hour charts? And, you know, what, if any, good strategies are that you could utilize on the 4-hour chart? And as I said, I'm going to share with you just a very simple 4-hour trend chart, the sort of the basics of a very simple, as I said, 4-hour sort of trend trading chart. What works well for FX, okay, but you could utilize it on asset classes with a tweak or two, so to speak. And then, as always, we'll check on the live markets as we get ready for the opening of the US session, which is in about 25, 26 minutes, ladies and gentlemen. For those of you who don't know me, my name's Paul. I've traded for many years, traded for funds, traded for clients. Primarily, I like to trade FX indices and commodities. I tend to be a trend trader for swing and position trades, and I tend to be a reversal trader for shorter term intraday trading. So some of my own experiences will come through in terms of our swing trading, okay, trends later on as we go deeper into this particular presentation. So, as always, if you're joining us for the first time, Monday Market Matters is ActivTrades, you know, start of the week webinar, right? So every Monday, 2 p.m. London time, we just look to cover a few items to help traders, you know, start the sort of week in the right frame as we prepare for the opening of the US market. So we always cover a little bit on the news. We always do a major piece on education, and as I said, today is going to be about 4-hour charts. We always have a little look at some of the ActivTrades platforms and tools that are available to you. And then, as always, we have a little look at the live markets, just looking at the US indices and perhaps the US dollar as we go into the start of the sort of the trading session for the week. So there's always plenty for us to cover in our hour, always plenty for us to pack in. So we'll get moving on with that. As I said, we always start with having a quick look at the news, and it's this, you know, it's an interesting week this week we have ahead, because normally by now, as you've probably heard me sort of maybe say over the last few weeks, normally when we're into this part of August, things tend to quieten down a little. You know, there's an awful lot of people away on holidays, and so markets tend to go into a little bit of a lull, as a general rule of thumb. It's not always the case. It's not all for all assets, depending upon, you know, what's going on in the world. But as a rule of thumb, things tend to thin out. However, this week we have kind of a very interesting week going on in terms of, let's say, the sort of the bigger geopolitical and central bankers elements. We have both the BRICS summit going on this week, and also later in the week we will start the Jackson Hole Symposium. So I think these are going to be rather interesting events. I think they're going to cover all sorts of all manner of elements regarding, let's say, the monetary and fiscal policy of the basically the major governments, major nations of the world. There'll also undoubtedly be some some photo ops, okay, and as always, central bankers, politicians, they like to make they like to get out and do a bit of grandstanding and make big sweeping announcements. Undoubtedly, there will be a few of those, okay, this week. So there'll be plenty for traders and investors to sort of chew over and look at as elements and details start to come out of those two major sessions. But as you can see, there is also just a lot of standard news coming out. There's an awful lot of the PMIs, okay, that will be out throughout this week for both manufacturing and services. You can see there on Wednesday, you've got Japan, France, Germany, the Euro area, the UK, and the US. Okay, they will be announcing PMIs, and we can also see the retail sales, US new home sales. Okay, and towards the end of the week, we will have, I think, Japanese CPI, and we also have German GDP. So I say this every week for the new traders who join us, at the start of their trading journey. At the start of your trading journey, I would not expect you to be able to maybe analyze the economic data, but it is crucially important that you know when it is coming out, because invariably, when that data comes out, that is what can induce sort of volatility into the markets. And so there's really, it's in your best interests to know when that news is coming out. You will find that there is an economic calendar on the ActivTrades website you can utilize and elsewhere. And you will also find that the team of analysts at ActivTrades will also send out at the start of the week and also daily, depending upon the data that's coming out, a little bit of an insight into what kind of news is coming out, what's going on in the markets. So be sure to make yourself available to all of that data. It's great, useful information to have. As I said, it is important to know when that data is coming out for the week ahead. So always start your week by checking the economic calendar. So there's as I said, plenty of news coming out, but what we like to focus on is our educational element, the element that you can sort of take away and utilize in your own trading and help you make progression in your own trader's journey. And as I said, today we're going to talk about trading 4-hour charts. And as I said, we'll specifically towards the end look at ways to sort of trade a trend on the 4-hour charts. But as the slide says there, lots of traders, when they are new to their trading journey, they want to and try to trade very short time frames, okay, in the financial markets. So they might be trying to trade 1 minute and 5 minute charts. However, the reality is that their present skill set and lifestyle probably prevent them from doing it in a sustainably successful manner. Being able to trade well at short time frames, takes a long time to acquire that skill set. Okay, and that is something that all traders, including myself, had to work at, right, to be good at and proficient at. And in fact, what might be more useful for new traders is to trade slightly longer term charts, and in particular swing charts, and in particular, especially for the FX markets, the 4-hour chart. So today I'm going to talk a little bit about the pros and cons of trading 4-hour markets, and in particular FX markets, and also how you could engage successfully with them. So the good thing is I'll be able to talk a little bit from my own experience. Okay, I'll be able to talk about the sort of the pros and cons. Okay, there's never any perfection in trading. It is about finding a way to engage with markets that is a reflection of your personality, is a reflection of your beliefs, and also takes into account your skill sets, but also your commitments. Most people these days, they are trading in busy lives, namely that they may have other commitments going on, caring for families, for parents, for job, running businesses, etc. And so it's about finding a way that you can trade that complements that, allows you to do it in a sort of sustainably and consistent manner. That is the way. And as I said, for many traders, actually sort of, those kind of a little bit longer term, those sort of 4-hour charts can be a very, very useful way to do that, based upon all of the other elements that they have going on in their life. And I suppose it'd be interesting to know, if those of you joining us here today, How many of you would trade on the 4-hour charts? Do you have experience of it, or is it something that is completely new to you? It would be interesting to know. You could put that in the chat box there. Okay, it's at the side if you've got any experience. Perhaps you're very new to trading and never really even been aware of it, or never really considered 4-hour charts, and that's absolutely fine. That's exactly what these sessions are for, to help just give you a little bit of education, a little bit of insight and knowledge, help you sort of engage with markets in a educated and successful and robust manner. That's what these sessions are here for. Maybe you're a proficient and experienced 4-hour trader, and you have your own particular idiosyncrasies or particular styles and stuff, and it'd be great to hear what, if any, experience you've had there yourself. So what I would say is that, in terms of a personal disclosure from myself, is that I particularly love trading 4-hour charts. Okay, I've always enjoyed trading 4-hour charts. They've always been the kind of the natural place, I find, for most of my swing trades. I just find that it's, for lots of reasons, that they've always worked well for me. And so, I'm very happy to be able to sort of share those experiences with you, and to sort of basically give you my own little bit of insight into how you can do it. Why do I love trading 4-hour charts? Well, for one reason, I have less time at the screens. So some people love to sort of spend 8 to 10, 12 hours in front of the charts all day. I did that. I did that when I worked for funds, a few years back. Now I tend to basically like to have focused time at my screens, and then go off and do other things. Okay, I have other businesses to run, family commitments, etc. And so having less time at screens is actually suits me. What it also does is, using the 4-hour charts, is that I find it easier to choose quality setups over quantity, and that's where I'm at my stage of my trading journey. And it doesn't matter whether you've been trading for 2 weeks or 2 decades. We are all on a trading journey, and for me, I find that I find it easier to choose kind of quality setups over quantity, and that's where I am at for my own particular trading. What it also means is that trading the 4-hour charts is that I have time to prepare for the trade. And what do I mean by that? Well, when you're trading 1-minute charts, things happen very, very fast, and you need to have your processes off pat. You need to almost be able to operate automatically in terms of how trading, because things will change and maneuver very, very quickly, and that will particularly that will become important, okay, being able to do that. Whereas on a 4-hour chart, I have time. I can spend days, almost a couple of weeks sometimes, watching my particular style of trades get ready to set up. So I'm ready, I'm prepared, and I can understand where my entries are, where my exits are. I can basically plan my trade much easier, without actually sort of the rush of having to do it on a sort of minute by minute basis. And what I tend to find is that generally means that I'm in a position to sort of identify and also focus on cleaner setups. I'm not trying to trade every single thing in front of me. I'm trying to think quality, clean setups. All right. So I mean, sometimes I miss them, and I'll maybe show you 1 or 2 that you miss. But that's trading. That's happening. I want to, as I said, I want to sit there taking clean, quality setups. I also find that trading the 4-hour charts allows me the opportunity to get some really good risk to reward elements on my trades. And those of you who will know me, or will have heard me speaking, I'm always very keen on talking about wherever possible, you want to be trading asymmetric risk to reward setups. So that means that if you're risking $100, you want the trade to be able to make $200, $300, $400, $500. I'm always looking for that kind of good asymmetric trade setup, and I find the 4-hour chart offers that. All right, it offers that in abundance. And also another important thing, and increasingly for myself, is that it allows me to do what I would call set and forget trading. And what I mean by that is that I've had time to prepare the trade. I know where my entry is. I know where my stop loss is. I know where my target is, okay, which we'll come on to more in a little bit of detail. And almost once my orders are on the platform, I could almost, as I say, set and forget. Once the order's triggered and once I can ensure that my stop loss is in the right place and that it's on the platform and that my target's there, if I wanted to, if I have to travel or if I have to go elsewhere or, I have other commitments, then I can almost set and forget the trade, okay? And that in many aspects is actually, it's good on two levels. One, it's just good because it allows me to do other things. Two, the ability to set and forget also means that, for new traders as well, you are less inclined to want to interfere or tamper, or you're less inclined to be prey to your emotions, the sort of surge of fear, greed, and hope that goes through you when you're taking on new trades. So, there's an awful lot of things that can help enormously in terms of being able to trade 4-hour charts and stuff. And so, as I said, I personally love them. I think they're a fabulous way to trade, and I'm going to share with some of my kind of hints and tips, okay, and some of my learnings from doing that over the years. So just looking at questions there, Ian's asking, do you look at the screens at specific times of the day? And that was a great question, Ian. You've almost set up the next couple of slides beautifully for me there. And the answer to that is yes. And why don't we move on and have a little look at that in particular. So what we're looking for here, and I'm just going to look at this on the MT4 and MT5 ActivTrades, but it may change a little bit depending upon the platform you're using, may change a little bit in terms of your location in the world. But I'm just going to go on the ActivTrades MetaTrader platform of let's say the Western Europe time frames. Just please amend this to wherever you may be in the world. But what we have is, of course, by the very nature that it is a 4-hour candlestick, we get a new 4-hour candle, at certain times of the day. So as a general rule, you will see that there's on the platform, there's a candle at midnight, candle at 4 a.m., 8 a.m., 12 midday, at 4 p.m., and then 8 p.m. Okay, and you can see there that I have those times for my London sessions. Okay, so for example, the 8 a.m. candle will start here summertime at the moment at 7 o'clock London time. Okay, so that suits me because that's when I'm sitting down, okay, to do my sort of trading in the morning. And to answer Ian's question, what it allows you to do is, once you realize the let's say the sort of the kind of the cycle of the 4-hour candle charts, well, what you can actually do is start to sort of put in a couple of windows. All right, and what I do is I have on my phone, okay, I have alerts throughout the day, really just in about 15 minutes or so before the 4-hour candle is due to close, okay, and then the new candle's about to start to print. And because as I work through it, I'm already just working on a little watch list, okay, to look at. So what that means is that so for example here, we are at a I'm doing this here to it's 20 past 2 in London time, okay, which means that in about 40 minutes time, the sort of the new London candle will be created. So at about, normally what I'll be doing is about 2:25, 15 minutes to 3, I would be sort of just my alarm would be going off and just go to my charts, okay, and have a look. All right, the particular scan very, very quickly, but also just one or two particular setups that I'm looking for that I might have seen develop over the day or over the week, might even be over the month. And what it means is that your windows for trading are much smaller. So if you are trying to trade, as I said, around other important commitments in your life, a job, running businesses, caring for children, looking after parents, whatever commitments you may have, what you can do is you can start to plan ahead and develop a little routine. The reality is that I'm only going to be looking at a few of the candles during the day. So I love trading, I really do, but the reality is I'm not getting up at 3 o'clock in the morning to look at the sort of the 0400 candle. Okay, but as I said, I will be there for the 0800 candle, the 1200 candle, and the 1600 candle. Those are the main ones. And then depending upon what I've got going on, maybe might look at the 8 o'clock candle, depending upon, as I said, what other commitments I particularly have. But what it does, as I said, is it allows me to effectively allows me to work with that. So Ian says, yep, the candles don't align with, let's say GMT midnight, and what they do is because it's based on the server time, hence why wherever you are in the world, you just want to spend a little bit of time. It'll take you 5 minutes just to work out, what that when that candle closes and completes and where it is relative to your location. So I appreciate that we have a truly global audience who join us today. So there is effectively people who will join us here on the from the UK and Western Europe, but I also recognise we have people from Australia, from South America, etc., who join us. So you just need to spend a little time just to work out and amend that 4-hour candle to understanding when it is starting or closing and starting, based upon your own place in the world. Okay, so you just effectively just want to sort of take that on board. But as I said, the important thing is that recognizing is this now starts to allow you to have a very, a much smaller time window. So it might be 20 to 30 minutes, depending on how busy and how active the markets are, at sort of around 7 in the morning, okay, around 11 in the morning, around 3 o'clock in the afternoon, depending upon the particular where you are based. All right. What I will also do is, for me, as a general rule, in this, people will do this differently. I tend not to open positions on a Friday when I'm sort of trading 4-hour charts. I kind of will only sort of run till sort of Thursday afternoon. There are reasons for that. It just means that I find it rare that I will be in and out of a trade on a Friday. The only way I do that is if there's big news. But if there's big news, I tend to just want to sit and watch and let that play out. And as a general rule, I prefer my positions to be sort of in and out within the week. Okay, I will occasionally carry a position over the weekend, but it will depend upon what that position is, what's going on, the state of the world. But as a general rule of thumb, I don't look to open positions on 4-hour charts from Fridays. Okay, I just tend to sort of I want my business to be done early at the start of the week, and in and out. Okay, and that's another reason that it suits me. Okay, I can be in at the start of the week and out, by Thursday, and that suits me. That suits me in my style of trading. Based upon my lifestyle and my parameters, my other commitments, that suits me and works with me very, very well. So, if we start to have a little look at the 4-hour charts and routines, you will hear me talk about, every week, regardless of how you particularly trail, that it is important to have a pre-trade routine, all right, a very simple price action trading plan that you can engage with and follow and do week after week after week after week. That is actually what's more beneficial for a trader, right? It's not about trying to find the absolute, rock star, A-star trade setup. Okay, it's about finding, it's about having a good routine. Okay, and doing the right things day in, day out, week in, week out, and taking good quality trades when they come to you. So you'll have heard me always talk about having, a good simple routine. So effectively, whenever you're opening charts, you should be drawing in significant levels on the monthly, the weekly, and the daily charts. All right, that might be horizontal levels of support, resistance. It might be big round numbers, gold was at $2,000 or the Russell was at 2,000. Okay, or big trend lines or significant patterns that might be being created. What we also want to do is identify whether the market is trading or trending or range bound. That should be relatively simple. And what I say relatively simple, and we'll have a look at the charts in a moment to confirm that, is you hear me say it every week, good trends leap off the chart. All right. If you're having to force it to identify whether it's a trend, the likelihood is it probably isn't one, right? Good trends will leap off the chart. The challenge we have is that markets don't trend as much as we would like. That's the only challenge we have. Markets only tend to trend 20 to 30% of the time. Once we're doing that, well, then, then I'm dropping down to the 4-hour chart and I'm waiting for particular price action triggers at particular levels. That's what I'm always looking for. And what I also suggest for traders is, I'm going to share with you one or two setups later, but as a general rule of thumb, if you're looking to enter a trade, be sure to wait for the break of the candle. What do I actually mean by that? Is that I appreciate when traders are at the start of their journey, they might see a particular trade candlestick setting up. Maybe it's an engulfing candle, it's a pin bar, it's an inside bar, etc. And they start getting a little bit excitable, and thinking, here we go, here's my trade. And then they think that they will get ahead of the market by basically trying to effectively get into that trade before the candle is completed. But the important thing is you want to wait for that candle to complete, because it's not until it completes that it confirms that whether it is a particular candlestick. And it's very possible that the candle looks like it's forming a let's say a pin bar, but in the last 10 minutes of the 4 hours something happens and the price action changes, and invariably it does not, and now you find yourself already in the market ahead of where you should be. And so once the candle is completed, as a general rule, I say is, wait for price to break. Okay, wait for price to break the candle either to the high or to the low. Okay, let the market take you into the trade. I'm going to show you a little advanced tactic later, but as a general rule, sure to wait for a break of the candle. Next, never ever trade without stop loss. All right, and if you're going to use a price action entry, which we'll talk about a little bit later, well, then your stop loss should be on the other side of the candle or the other side of the pattern. As a general rule, I say never risk more than 1% of your capital on any one particular trade. It can be less than that. It doesn't have to be 1%. It can be less, but as a general rule of thumb, that's what we suggest in terms of your capital risk. And as I said earlier, you want an asymmetric reward to risk. So, and personally, I would say anything over 1.5, 1.5 to 1 is a good reward to risk. But actually, 2, 3, 4 is very achievable on the 4-hour charts, and that's one of the reasons I particularly like them. And the important thing is that you'll hear me always going on about is that whatever you're trading, however you're trading, make sure you record your trades, make sure you review them, and ultimately what you're looking to do is to repeat the good trades that work for you, and cut out the sort of sloppy, impulsive trades that everybody takes because you're a human and you're learning, but invariably cutting out those mistakes, okay, and repeating your good trades. That's just good business, and this, you have to look at this and treat it like a trading business. That's what we're particularly looking at. That's the way good traders work, within markets. So that's just an element of a pre-trade routine, which it's the bare bones of one. You can get a lot more detail in that, but if you're doing these things, make sure you're doing the right things, okay, session in, session out, and that's what we particularly want to be looking at. So when it comes to 4-hour charts and what we can use, well, pretty much you will find that a lot of the price action ideas that I've discussed in previous sessions, and you will find those sessions on the webinar archive of the ActivTrades platform. Be sure to go and check them out if you haven't already. So the good thing about those 4-hour charts is that the kind of price action ideas, okay, and the concepts, they tend to work. So things like trend line breaks and bounces, breaks of support or resistance, continuation and reversal patterns, moving average bounces, price action candlesticks, buying pullbacks and selling rallies and trends, and around news announcements. Okay, so as a general rule, what I normally suggest is news announcements. Don't be looking to trade in front of them. Certainly don't be looking to trade at them. Let the markets do its thing. And as a kind of as a rule for let's say intermediate traders, is quite often what I find is that I might get a very good setup in the morning. Let's say there's that sort of 7 a.m., 8 a.m. candle has created me a really nice price action setup. But what I know is that there might be, let's say, there might be UK news at 9:30 or midday, or there might be US news at 1:30, 2:30, etc. So what I will do is normally I will wait. I won't put the trade on in front of big news if it's if it's relative in terms of the currency I'm trading. I'll wait for the news to come out, and then if the setup is still valid, then I would look to enter after the news. Okay, that's just these are just my simple rules that I've worked with over years. That make sure I'm doing the right thing week after week. Okay, it's not about, as I said, not about trying to be a rock star, okay, or trying to be a superstar on one trade. It's about just doing the right things, okay. It's just about running a good business. That's what it is. And in particular, let's bring up the old drawing tools here. In particular for new traders, and I'm going to share one or two ideas about that. Things like you'll find moving average bounces, price action candlesticks, and effectively buying pullbacks and selling rallies and trends. Right, they in themselves are you could just trade 4-hour charts, just basing around those particular concepts, and in particular the price action candlesticks. So things like pin bars, right, which is next week's session is going to be, I'm going to go over a little bit of a deep dive onto pin bars, so be sure to join us that. Things like engulfing candles, things like star formations, okay, there's a morning star, there's an evening star, things like key reversal formations, okay, things like that. Those price action candlesticks on a 4-hour chart, you can actually just trade those very, very well. And as I said, I'm going to give you the bare bones of a very simple trend following way. But even if you are looking to trade reversals, or if you're looking to sort of trade even range bound markets, just been having a good understanding of those simple price action candlesticks and understanding the context within which they appear on a 4-hour chart can help enormously. And you'll hear me talking about we want to understand the context. Then you want to have the pattern, and then we're looking for the what is the trigger. And I'm going to talk about the triggers in a little bit in a few slides time. So as I said, the good thing is that you can, everything we've discussed previously in terms of ideas, concepts, price action candlesticks, they are all very, very valid to trade in 4-hour charts. What I suggest, though, is that you don't have to try and trade all of those ideas. What you can, even just one of those ideas, maybe you just trade bounces off moving averages, or maybe you just trade a candlestick, or maybe you just trade a particular pattern, and just get very good at trading that. It is enough, because when we look at the 4-hour charts, we have a broad spread of instruments, not even just on the ActivTrades FX offerings, but also when you're going to across things like indices, commodities as well. A couple of stocks, and a couple of the cryptos, but there's a huge spread. Okay, there is a huge spread of instruments that you can trade, and you'll start to see and understand how these particularly look to play out. And we'll have a little just a chat about some of them here and now. So I've just picked up just a couple of random charts, really, a couple of random charts to sort of just understand how we can look at and what we can take from them. This is the Euro Aussie in the 4-hour chart. And actually what had happened is that the Euro Aussie had been primarily sort of mostly going sideways. But as I said, here we go. Let's just clear these down. If you are not aware of your charts, okay, what I always suggest is putting, okay, here we go, putting the designators, the time designators on there. You'll see those kind of dotted vertical lines. So on the 4-hour chart, that is delineating a week. Okay, so between here and here, that's Monday to Friday. Okay, that's 1 week of 4-hour charts. And as I said, what we're interested in is price gets here. This is the start of the week. What does price do? Price prints there. That is an evening star formation there. And if you don't know what an evening star formation is, go to the webinar archive. You should find examples of them on there, okay, from previous sessions. And what I also like to see is that in this particular case, price went down to a previous level of support, and then basically put in a double bottom there with basically what I had here was effectively a couple of double pin bars. So it's a reversal pattern. And the second leg of it is a couple of very clear, very solid pin bars. And as I said, next week we're going to do a deep dive just on pin bars, so be sure to join. And then what we saw is for the rest of the week, that price moved there, okay? And so, we moved from that area of around about 160, 170 to, well, what's that, about 164.30, okay? So what's that, about 250 pip, a 250 pip move there, okay? And that, as I said, one of the reasons I really do like 4-hour charts is that there is the possibility to get nice swings, okay, to get nice swings where the instrument, whatever it be, I like to focus on FX, but what you'll find in FX is that you'll be able to find a nice move, okay, that might move somewhere between 150 and 350 pips, and your ability to get part of that, to take a piece of that, is actually, as I said, is all you need to do. And because you're trading 4-hour chart, you're not having to sit there constantly. You get the chance and the time to do your analysis, to watch the trade set up, to be ready for it. Okay, and let's just clear this down here. The very next week, it starts with a pin bar, which becomes a version of an evening star. Okay, before it moved its way down as part of its uptrend. But even though, as I said, they kind of oops, excuse my drawing. You'll have to, as I always say every week, I'm a better trader than I am an artist. So please forgive my drawings. But yeah, really that is it. But hopefully you can see that that's a bull flag. We had an evening start, which was a nice move down for a couple of days, but that was a flag pattern, all right, in an already existing uptrend. Okay, so as I said, 4-hour charts, you get a chance to sort of sit and watch and wait to see these charts play out. You get a chance to identify the setups. Okay, you also get a chance to identify when markets are to be left alone. So even here, okay, I have on my charts, you'll all have seen that this. I have normally the blue 20 period moving average, the red 50, the green 200, and that will help us later with one of the trend following methods. But what I also say to traders is when I see price and the moving averages all wrapped up together, that is normally a good sign that price is consolidating. Okay, so I don't particularly want to trade consolidation. I want to wait until I see very, very clear examples that price is going to break out, or price is letting me know what it wants to do. Okay, I'm not here to fight the market. I'm just here to work with it. And as I said, this was Eurodollar on the 4-hour chart. I'm going to go into this more in depth in a few slides time. But as I said, you can see here a blue 20, a red 50, a green 200, and we can see here, once price here is above the 20s, above the 50s, above the 200, we're into a good trend. And it's those pullbacks, okay, especially when they end with great price action. Like in this case, that is what we would call it's not only is it a 3-bar reversal, but it is also a single candle price action combo. And what do I mean by that? I mean by that particular candle it's a pin bar, it's an engulfing candle, it's a key reversal candle. If you don't understand those, as I said, have a look on the webinar archive. You'll find elements of that there, and in particular for price action pin bars. Join us next Monday. I'll go into more depth and action on that. But you can see that basically that was in itself in a particularly nice trend. Now, of course, it's always easy in hindsight. It always looks easy in hindsight. Okay, you don't know that it's going to move like that in that particular level of strength. All you can do as a trader is have a context. Okay, understand the environment. So that was price. Starting to work its way up in an uptrend. We're looking to buy pullbacks in that uptrend, and when we get a price action, that is the trigger. Context, pattern, trigger. That's what we're looking. Just keep it nice and keep it nice and simple. And as I said, that some people like to trade ranges. Wouldn't necessarily be my particular style, but this is the pound Swiss pound Swiss franc, and we can see that there are trends, and what I always say is that here we go. That some traders would see that as an inverse head and shoulders. Some people would see that as a double bottom. Either way, it's telling you at the start of that week that it wants to reverse, and then actually what we get is we get our moves. As I said, excuse my drawings. And then actually for about a month, we trade our way in a range there around about 150 pip range there, okay, on the pound against the Swiss franc. Now, as I said, I generally don't tend to like to trade range bound, but sometimes the ranges are big enough that the swings between are significant enough to actually to be traded, especially when you get here like that. So that is a, there you go, that is a bearish engulfing, bearish key reversal candle. And where does it go down? It goes down to the range before it puts in a pin bar and an engulfing candle before it comes back up. So the thing about 4-hour charts is that when you do get into ranges like that, it does provide opportunity. And if you specifically like to trade ranges, you'll find there are particularly good opportunities. Okay, that wouldn't be my specialization. I know what I'm particularly good at. But I recognize that some people do like to trade those kind of particular ranges, those particular different price action. And I'm just saying, 4 hours, they provide all those opportunities. So as I said, I thought I'd share with you just a very simple, the bare bones of a simple 4-hour swing trading setup that you could take away and start to utilize for those of you who are on your start of your particular journey. And not terribly not terribly complex, or certainly I don't think so. Not terribly how would I say, not terribly kind of difficult to understand, and you can have it as a simple routine, okay, as part of a way to sort of trade. So here's some steps. First step, okay, draw on your support and resistance patterns and levels from the monthly, weekly, and daily charts. So when you start, do that and draw that down as you would do normal. And then, what you're looking for is you're looking to sort of build a little watch list, okay, of instruments that have the following in place. So, for a long environment, for a bullish environment, the 4-hour chart, we should have the price above the blue 20 period moving average, which is also above the red 50 period moving average. And for a short environment, 4-hour chart, okay, that should be below the 20, which is below the 50, okay. Then what we're looking to do is on the 4-hour chart, what we're looking to do is just to start with, just trade all of the pin bars that are there in the direction of our environment, whether it be longer environment or whether short environment. And we will also use an aggressive, 50% PBA pullback entry, which I'm going to explain in the next slide or two, depending upon your risk appetite. And if you have a bit of experience of price action candlesticks, you could also utilize engulfing candles and key reversals if you know them. But I just wanted to give it something very, very simple that traders can work with. Keep a note of how many of them get triggered and how many do not. And we'll go in a moment, but we can also use using the 261 fib extension as our main target, and I'll show that on the charts in a particular moment. So let's talk a little bit of that, of some of the specific details of that. Here we go. In particular, sort of what you'll hear me talk about sometimes is kind of the 50 PVE, the 50% pullback entry, and what that is that is actually a pullback within our trigger candle. So when I have when price is in that uptrend and it pulls back, and I have a pin bar here, okay, what I'm actually looking for is normally I would enter on the break of the candle, but actually what I'm going to do is I'm going to be very aggressive, and then basically have my entry just in front of kind of the 50% of the halfway of that particular candle. It's very aggressive, and there is a higher risk of being stopped out because price might actually trigger you in and continue down. Okay, so you have to accept that. There is no there's no reward without risk. But what we want to be able to do is to be able to work with it. So what you'll be doing for a long order is you'll be placing a buy order at 50% of the pin bar, or I would suggest just about the spread in front of it. Never trade without stop loss. Your stop loss should be beneath the bar. That could be between about 3 to 10 pips, depending upon the instrument you're trading and how big the spread is. Also, what you want to do is set your order for the next 3 periods. So if this is a 4-hour candle, this means it's for the next 12 hours. Okay, you can do that on the platforms. Okay, the ActivTrades platforms. And if it does not trigger within those 3 periods, well, then the order should be cancelled, because what we're looking to do is for it to be a quick pullback and the dominant trend re-exerts itself and move. So we're looking to do that. So it is kind of, as I said, it is quite an aggressive entry, and it does mean that there will be chances that you might either be stopped out or not even triggered in, because sometimes maybe it might not even pull back 50% of the time. But this is what we're looking to do. And as I said, be aware that sometimes the trade will not go deep into the pin bar to trigger your order. Here we go. Let's just okay. Sometimes the candle completes, the next candle starts, and then maybe it doesn't go down deep enough before it shoots off. That happens. All right. Welcome to trading. All right. Such is life. At this stage of your trading career, don't be chasing price. Okay. Just as I said earlier, make a note of how many triggered, how many didn't, and that is data that can be utilized. Okay, to improve your entries once you've got enough. Once you've got a good enough sample size of the trades as they're particularly playing out. So yeah, as I said, draw on the levels from your monthly, weekly, and daily charts, because you don't want to be buying into resistance. You don't want to be selling into support. All right. So, as I said, for longs, your 4-hour chart has to be, the price has to be above the 20 and above the 50. For shorts, should be below the 20, below the 50. 4-hour chart, all the pin bars, okay, that you utilize in line with what you're doing. We'll look at the moment. Okay, we enter utilizing a 50% pullback. As I said, keep a note of how many trigger. You can use the 261 fib extension target. I'll explain more about that in a moment. It might be easy to show on the charts. For those of you who wish to, okay, when the price has moved towards the 161 fib extension, then you can move stop to break even, okay? But generally, what I suggest is you let the trade play out. You should expect probably around about a 42 to 48% hit rate, and an overall reward to risk of, I'd say, depending on spreads, it'll probably be between about 2.3 to 2.8 to 1. That's what we're looking for. There is a window of that based upon the size of the spreads, okay, for the instrument that you're particularly trading. And as I said right at the start, always keep good records, review them, repeat the good trades, cut out the sloppy trades, and you have a very simple, right, a very simple 4-hour trading plan that you could actually follow quite easily there. So yeah, as an example from last week, this is pound against the Japanese yen 4-hour chart. Okay, price has been in an uptrend. Okay, price has been above the 20 and above the 50. All right, and so we can see that's been in a very trend. And at the start of the week, what happened is price pulled back here, and and it actually printed here. There's a kind of more of an engulfing candle, key reversal, pin bar candle there. Okay, that's what we're looking for. It's in terms of giving us an opportunity to sort of trade the pullback in what has been a trend, and we can see here. Let me just go on to the next chart. That's what we're looking for, and actually, what we saw is that our entry, okay, remember our entry is just in front of the 50% of the pullback, so that was at 183.80. Our stop loss is beneath the low, okay, so the low of that candle was 183.45, so the stop loss is at 40, okay, so it's 5 pips beneath. And what that has done is that's given you a trade risk, okay, your difference between your entry and your stop loss of 40 pips. The target, remember, the target is the 261 fib extension. All right, and I'll show you where you can find that on the ActivTrades platforms in a moment. And predict the target at 185.19, which was actually 139 pips. So you're effectively risking 40 pips for 139. 140 pips for 139 pips. Okay, so the overall risk to reward ratio was 3.4R. Okay, so that was actually, that just worked very nicely. It actually did go all the way to the 423 extension, but woulda, coulda, shoulda. It's easy in hindsight. Okay, easy in hindsight. But that was, even that trade, as I said, you can almost like set and forget. Once you've set your orders, set your stop loss, set your target. As I said, it can almost be a set and forget. As I said, I like to normally do my business in the first day or two of the week. And what we can actually see is actually what happened is, the price did continue up and it did pull back. And then actually it gave us 3 pin bars there, right? Not 1, but 3 pin bars there, and you could be saying, well, Paul, they were perfectly good setups. Look what it's done. And you'd be right. But remember what I was saying is that I don't. These were Friday. Okay, I don't like to sort of set new orders on a Friday. Okay, I don't like to. That's my style. Some people would happily have set those orders and carried them over the weekend and sort of and seen those trades hit the target. That's absolutely fine. Remember, it is all about understanding your own risk profile. But as a general rule, I want to be in at the start of the week and I want to be done by Thursday. I don't on 4-hour swing trades. I don't particularly want to be entering on Fridays to carry over the weekend. That's my style. Okay, other people will differ, and that's absolutely fine. That's absolutely fine. You have to find your own particular style, your own particular way. But that's what we particularly look at. As I said, we're looking for good quality setups rather than trying to trade absolutely everything. And I said that was in a very clear trend. Good trends leap off the chart at you. All right, you don't need to force it. You don't need to push it. So let's go and have a little look at the live market, shall we? But before we do, just quick to conclude that trading 4-hour markets allows private traders to trade around their exciting lifestyles. Okay, if you're busy with jobs, running businesses, running families, caring for parents, etc. What it does is, the good thing about 4-hour chart is it requires small time windows. You could get away with 20-25 minutes around the close and open of each of those 4-hour candles that you're awake for. So you only need to check your charts a few times a day. It allows you to get on with all the other stuff, get on with your job, get on with all the other things. And in many ways, for many traders, that's better, because it means you can't get involved in sort of interfering in your trades. So still do your analysis monthly, weekly, daily. Look for those significant levels, because you don't want to be buying into resistance or selling into support. Then use the 4-hour chart to execute your trade plan. And this is, one of the other benefits, I think, for the 4-hour chart is because I appreciate new traders. Sometimes they get a little bit overwhelmed or intimidated. There are so many different time frames. They sort of, get overwhelmed because it might be doing one thing on one time frame and it's something completely different on another time frame. This way, just focus on the 4-hour. Just focus on that 4-hour. Make that your primary execution time frame, and just work away on that. And as I said, all of the good price action concepts and ideas and setups, they work well on the 4-hour chart. And also you can just take the bare bones of that versatile swing trader 4-hour setup there. You can look at that. That's utilizing aggressive pullback entries onto pin bars, but also engulfing candles and key reversals, and utilize that to basically to get on board with strong dominant trends. So plenty there. Let's have a little look at the live markets, shall we, ladies and gentlemen? Just we can take that away. But before we do, just remember that next week, okay, is 4th of September. There you go, and it'll be we'll have in fact, no, actually not next week. I apologize, because it's the 28th of August next week, which is a bank holiday here in the UK. In 2 weeks' time, I do apologize. It's just I thought that was a bit quick. In 2 weeks' time, we will be back with Monday Market Matters, and that will be on how to trade pin bar formations. We'll take a little deep dive specifically into pin bars. Okay, so if you utilize them, or if you're new to trading, or if you want to know more about them, be sure to join us as we'll go through. You can see the QR code there. You can take a screenshot of that with your mobile phone if you're watching this, and then that will take you to be able to register, so you'll get all the details for it. And if you've got any questions, as always, you can contact us. You can see the number there for, that's the English desk number, the 0207 6500 567. Or email us, englishdesk@activtrades.com. Maybe you've got some feedback, maybe you've got some comments or questions. by all means, put them in there. Maybe there's things you'd like to see me cover in future, okay, to help you, then please, we're very happy to take that on board. We want to make these sessions as useful as possible. So just bear with us a moment. What we'll do is we'll switch across to the chart. So just bear with us a second. I'm hoping that you can see my chart, hoping that you can see my screen. So, this is British pound here. And, this is a profile I've got here, 4-hour charts here. Let's bring that pound against that yen, which is what we just looked at from last week. That was the trade from last week, okay, after we set up into that trend. As I was saying, it put in 3 pin bars there, but the reality is that invariably those were Friday trades, and this trade happened overnight here, this kind of bullish candle, and so we'd kind of pushed our way up there, okay. So it's continuing to do that. That we'll just watch that as that plays out. I was also here, pound against the US dollar. I think this is just put on as an example here. So if I zoom out here, okay, so this is the pound against the US dollar here, just an example. Remember what I was saying, 4-hour charts, the sort of timeline delineates, that's a week, and actually, we'd had a couple of good trends there, but the reality is, if you look at that, for about the last 3 weeks, haven't we? We've gone sideways. Welcome to trading in August. Okay, this is a good indication of what August is like. We can see that it has gone mostly sideways, hasn't it? So remember, and if you needed any help, then the 4-hour 200 period moving average is just literally, it's flat. It's going sideways. It's going flat. All right, absolutely. But what we did have, all right, just as a bit of an example, is let's clear this off. Get rid of that. Bear with me 1 second. Let's zoom in. Is that what we did have? Is we had the 20 above the 50. Okay, price had been above it. Friday put in a big pin bar, and then actually to today. Okay, so the earlier candle here today at sort of 7 this morning put in when that completed that, printed a pin bar there. So what you'd be looking to do is to draw. There you go. Is to use your fib tool there. The fib tool there is giving you the the pullback in there, and actually what I had as my entry is 127.30, just a couple of pips in front of the 50% pullback. Okay, 50% pullback into that candle, which is where we traded down to. Stop loss, you can see, is up, is at 28. About 2,800. Okay, so and my stop loss would have been at I put it at 6 points, so at 127.06. So entry at 27.30, stop loss at 27.06. So the trade risk is 24 pips, and using the 261 target of 128 handle, that would be like 70 pips. So it was about 2.9 or just about 2.9 off. That trade works out. I wouldn't necessarily be terribly confident about the trade. It was started off well today, but I think as I was saying before, you can see for yourself, most of that price is just going sideways at the moment, and I expect that to continue. Okay, maybe later on in the week, when as I say, we get into the bricks and the Jackson Hole, maybe something will happen there, but that'll be more to do with the US dollar and what impact that'll have. That was a setup, but as I said, that I think price going sideways means that we'll probably just be in the we'll probably just dawdle along for a day or two. We also had, if you look at pound against the Australian dollar, here, all right. So once again, we were in the trend that we wanted. Price had pulled back into a flag pattern. It bounced off the 50 and then gave us a couple of pin bars. These were on Thursdays. These were our trades at the end of the day on Thursday, and price rallied its way up. And then at the start of last week, we had another couple of nice setups. But actually, what happened is, what was frustrating was that we just literally got pipped out there. Nothing is perfect before price rallied its way up there. Okay, but as I said, I want to be doing my business preferably at the start of the week, but never on a Friday. Okay, never on a Friday. We were looking here this week, but as you can probably see, you might be able to sort of see on there, the pound against the Aussie has gone a little bit There we go. It's just gone. It's getting very, very, that's kind of building up to blowout. That's what I'm waiting to see for that in terms of pound against the Aussie there. Okay, ladies and gentlemen, I wanted to show you a lot more, but unfortunately we've run out of time. So all good things come to an end. Okay, time flies when you're having fun and all that. So I apologize that we've run out a little bit of time there, but at least we've had the tech working for us this week. I apologize, we've had a few challenges the last couple of weeks, but we seem to be back on track with that, so that's fabulous. As always, I hope that you have found that useful. I hope that's given you a bit of insight into the 4-hour chart and how you can perhaps utilize it in your own trading. There's lots there. Okay, have a little look. If you want more insight, well then give us some feedback, and we can sort of look to provide another session going forward. As always, I wish you the very best of success in your own trading. Just a reminder that there is no Monday Market Matters session next week because it's a bank holiday here in the UK. So we're back in 2 Mondays' time, okay? 4th of September, we're going to focus on pin bars, and I hope you will join us for that. So trade well, everybody. Have a great trading week, and I will speak to you soon. Many thanks.